The desert wind howls across the Golan Heights, and the first missiles streak through the twilight sky. In Tehran, sirens wail like banshees announcing ancient vendettas. In Tel Aviv, coffee cups tremble in trembling hands. No one saw this coming. An inferno ignited at the fragile fault line between two nations, and the world's heartbeat quickens. Oil tankers reroute around a boiling Strait of Hormuz. Equity markets plummet as algorithms choke on conflicted data. In the chaos, one line of code moves inexorably higher. Bitcoin. In less than 24 hours, its price shatters expectations, $105,000 flashing on the ticker like a neon lighthouse in a storm. Ask yourself, when the fires of war engulf a region steeped in millennia of tension, where does humanity turn? To gold? To the dollar? Or to the invisible ledger humming across sun-drenched server farms? This is no longer a theoretical debate. The question that claws at your gut is simple. When the world's old certainties fracture, will you find refuge or risk being left stranded on the wrong side of history? This is not a cautionary tale. It is a call to arms for the mind. Because in this moment, when fear tugs at your sleeves and pundits peddle half-truths, your clarity becomes your only weapon. We begin not at the beginning, but in the heart of the storm. Imagine sitting before your screen as Bitcoin leaps from $68,000 to triple digits in hours. Your pulse surges. Headlines scream safe haven asset? Digital gold's moment? Your breath quickens as you scroll through on-chain analytics. Whale wallets swelling, stability funds depleting, network hash rate dancing in triumph. Beneath the frenzy lies a fundamental truth. When sovereign powers clash, monetary power disperses into thousands of nodes, each one a beacon of possibility beyond government fiat. You feel the tension in your chest, conflicts shadow at war with your desire for security. The old narrative whispers, stick with tradition, hold cash, wait for the storm to pass. But in the next breath, a new story emerges, one written in code, validated by consensus, impervious to borders. The question burns, which story will you choose? This is the crucible of modern finance, a battlefield of ideas and assets where the winners are those who act, not those who hesitate. And yet, clarity does not spring from headlines. It is forged in the mind, sharpened by rigorous discipline. Suspend disbelief and ask yourself, what does it truly mean to hold Bitcoin today? Not as a speculative gamble, but as a bulwark against geopolitical collapse. When pipelines are severed and supply chains convulse, gold is heavy, cash is bulky, but Bitcoin is weightless, borderless, unkillable. Each transaction broadcasts a message. I choose autonomy over subjugation. I choose digital resilience over paper vulnerability. But autonomy demands more than conviction. It requires vision. You must see the storm's eye, not just its swirling periphery. That means peering into the mechanics of monetary breakdown. Global central banks double down on liquidity, expanding balance sheets in an effort to contain panic. M2 supply swells beyond $8 trillion in the United States alone. Interest rate futures skitter across screens. Credit default swaps spike against emerging market debt. In this arithmetic, every basis point becomes a brushstroke painting the portrait of an unstable equilibrium. Here lies your first tactical insight. Read the money supply like a professional. Watch the Fed's balance sheet with the same urgency you would monitor a battlefield dispatch. When liquidity floods the system, equities may rally, but beneath the veneer of optimism, inflationary pressure mounts, eroding the purchasing power of every fiat denomination. Bitcoin, capped at 21 million coins, becomes the ultimate deflation hedge. As real yields vanish into negative territory, the store of value narrative crystallizes into a clarion call for capital preservation. And yet, capitals shift in whispers before they thunder in headlines. Behavioral cycles, greed and fear are the tectonic plates beneath the market's crust. When panic roars, historically, that has been your cue but you need more than reflex, you need a framework. Observe the melt-up phase described by Howard Marks. Irrational exuberance propelled by narrative velocity, where price movement feeds on its own momentum. During these phases, Bitcoin can triple in less than a month, but it punishes the latecomer with amplified volatility. You must time your entry not at the crest of the wave, but in its gathering trough. So, how do you discern the trough amid chaos? The answer lies in on-chain behavioral analytics. Study the percent of supply held by long-term address clusters. When long-term holders dip below 60%, distribution is occurring. Panic may have infiltrated. Conversely, when that metric breaches 65%, accumulation has resumed, and the narrative recenters on digital gold. Combine this with exchange flow data. Net outflows signal confidence. Rising inflows echo capitulation. This dual-layered approach grants you the edge of seeing beyond every ticker, every pundit, every fleeting tweet. By now, you may feel the anxiety easing into exhilaration discipline forging clarity. But vision without purpose is hollow. Every strategy needs a mission, so define yours. Is your goal to preserve purchasing power, to achieve true financial sovereignty, or to ride the digital revolution toward generational wealth? Each purpose demands its own allocation blueprint. A conservative steward might target a 5 to 10% Bitcoin allocation, balancing risk with stability. A visionary opportunist might exceed 20%, leveraging calculated margin exposure to amplify gains, knowing full well that drawdowns of 30 to 40% are built into crypto's DNA. Purpose-aligned, you must act. Execution begets conviction. Place your limit orders with precision. Stagger buys across volatility bands to average cost. Protect gains with trailing stops denominated in Bitcoin rather than fiat, ensuring your digital fortress retains its structure even as paper currencies ebb and flow. But remember, in the theater of markets, the grandest drama unfolds beyond price charts. It unfolds in the corridors of power. Watch legislative agendas unfurl. SEC hearings on spot Bitcoin ETFs. G20 deliberations on digital asset regulation, central banks piloting CBDCs as a counterattack. Each policy pronouncement shifts capital like winds drive desert sands. Remain vigilant. Regulatory clarity in the United States could usher billions into ETFs. Hostile regulation in Europe could trigger outflows into Asia. Adapt swiftly. This is the hallmark of true mastery, the ability to read both code and covenant. Because in the coming decade, economic power will hinge on who controls the rails of money itself. And so, we return to our titanic question. In this conflagration of nations, assets, and ideologies, are you on the right or wrong side? Your moment of truth arrives not in analysis, but in action. The missiles thunder above. The markets quake below. Bitcoin sits at $105,000, a digital phoenix rising from geopolitical ash. The choice is elemental. Stand as a passive observer, tethered to fragile paper. Or step into the arena armed with clarity, fueled by purpose, and driven by unshakable conviction. The storm rages on, but its eye beckons those with the courage to see. Will you answer the call? In the next breath, you will decide your fate. The war drums still echo, but already, history rewards the bold. Your future begins the moment you choose to act. The world you knew is gone. It didn't vanish overnight. It eroded slowly, silently, while you were distracted by convenience. While you scrolled. While you watched markets rise on empty earnings. While governments inflated currencies with promises they could never repay. While central banks weaponized interest rates like blunt tools, swinging from one extreme to the next. And now, under the pressure of war and inflation, the illusion is shattered. You see it clearly. The old system was never designed to serve you. It was designed to survive without you. But now, the playing field is cracking, and when cracks appear, so do opportunities. Understand this. Bitcoin didn't jump to $105,000 because it's a fad. It soared because trust collapsed. Fiat trust, institutional trust, geopolitical trust. And when trust dies, value migrates. Like water seeking the lowest point, capital flows to the place of least resistance and highest potential. That place is not Washington. It's not Frankfurt. It's not the yuan or the euro or the yen. It's protocol, immutable, uncensorable, alive 24/7 with no CEO, no borders, no bailouts. Let's talk real power now, because that's what this moment is truly about. Not just price charts, but sovereignty. Not just profits, but positioning. Bitcoin is no longer a tech rebellion. It is the lifeboat, and the richest, smartest, most adaptable players on Earth are quietly climbing aboard while the headlines scream distraction. Think tanks will not warn you. Media won't highlight the shift until it's profitable to do so. But look at where the capital is flowing. Sovereign wealth funds are allocating through OTC desks. BlackRock and Fidelity are offering spot ETFs while preaching caution. Nations like El Salvador and Bhutan are mining Bitcoin with state energy. Dubai, Singapore, and Hong Kong are racing to regulate not ban but harness. The signs are everywhere. If you're awake enough to read them, this is your second tactical edge. Follow the silent migration of capital, not the noisy distraction of headlines. In 2025, the greatest transfer of wealth is no longer about who owns the factory, the farmland, or the fossil fuel. It's about who controls the rails of value exchange in the post-Fiat world. You are witnessing the monetization of a network more trusted than central banks. A monetary revolution that doesn't ask for permission. That's why Bitcoin rose not just despite war but because of it. Every missile over Tehran, every fire in Gaza, every diplomatic breakdown in Brussels pushes another $1 trillion closer to Bitcoin, not as speculation, but as sanctuary. Do you see the shift? We've left the era of price action and entered the age of value alignment. But understand, this is not just about Bitcoin. It's about what Bitcoin represents in a broken macro system. It is your compass in the monetary jungle. If you want to survive this age, learn to see the invisible forces. The collapse of confidence in sovereign debt. The rise of hard digital assets as collateral of last resort. The emergence of permissionless systems as a counterbalance to weaponized regulation. The digitization of scarcity in an age of unlimited printing. Do not underestimate how seismic this is. Never before in history has the world had access to a money supply that is finite, programmable, and beyond the reach of any state actor. Not gold, not oil, not dollars. This is Schumpeter's creative destruction in real time. Not of industries, but of the very assumptions on which the financial world was built. And so we must rewire not just our investments, but our economic mindset. Ask yourself, what is wealth in a post-sovereign world? What is security in a world where even the safe havens are sinking? What is freedom when capital controls and monetary surveillance are tightening with each crisis? Here's the paradox you must embrace. In an age of surveillance, true privacy becomes luxury. In an age of overregulation, decentralization becomes survival. In an age of inflation, digital scarcity becomes sovereignty. This is why Bitcoin at $105,000 is not a climax. It is a whisper, a warning, a window. If you're still waiting for the right time to enter, you're missing the point. The right time was years ago. The second best time is before the next geopolitical escalation sends it to $250,000. You don't chase Bitcoin. You position yourself inside the system shift it represents. But let's go deeper. Let's talk about the psychology of denial, because that's what traps most investors at moments like this. When paradigm shifts occur, the average mind clings to the familiar. It waits for mainstream validation. It tells itself stories. It's just a bubble. It's too volatile. Governments won't allow it. But every disruptive breakthrough, electricity, the internet, democracy itself was once dismissed as dangerous, unstable, unscalable. Your job isn't to wait for approval. Your job is to see ahead. As Peter Drucker said, the best way to predict the future is to create it. But first, you must unlearn the conditioning that was designed to keep you obedient to the old banks, to the central authorities, to the illusion that fiat, propped up by infinite debt and geopolitical coercion, is somehow safe. It isn't, not anymore. So here's the question history will ask of you in the years ahead. When the collapse began, were you a prisoner of the past or an architect of the future? Because this is what's coming. As fiat systems fail, new currencies will rise. As trade alliances fracture, digital commerce will rewrite the map. As governments scramble to maintain control, citizens will flee toward voluntary systems of trust. And in that migration from coercion to choice, those who understand the technology, the behavior, and the economics will inherit the next era of prosperity. You need to be one of them. Not next year. Not when CNBC tells you it's okay. Now. Let's be clear, this isn't about becoming a Bitcoin maximalist. This is about being a realist in an unreal world. If you hold only fiat, your wealth is melting. If you hold only real estate, your liquidity is locked. If you hold only stocks, your exposure is algorithmically manipulated. But if you hold Bitcoin and understand how to read capital flows, policy trends, and narrative shifts, you hold an escape hatch. You don't need to sell everything. You just need to allocate like someone who sees what's coming. And what's coming is bigger than a number. Bigger than $105,000, bigger than Bitcoin itself. What's coming? Is the redefinition of money, of trust, of sovereignty. And only those who act before the tipping point will reap the rewards. The others? They'll be left behind paralyzed, bitter, wondering how the game changed without their permission. It didn't. It changed because they waited. So, what are you waiting for? Then let's go deeper beyond headlines, beyond hype, into the structural rewiring of the global economy itself. Because Bitcoin at $105,000 is not merely a speculative fever. It is a symptom of something far larger and accelerating. Breakdown of the economic assumptions that govern the post-war order. And this breakdown didn't begin with missiles or monetary policy. It began the moment we disconnected money from value, leadership from responsibility, and innovation from ethics. What you're witnessing now is the reckoning. The Keynesian scaffolding is splintering. The neoliberal myth of infinite growth on finite debt is collapsing. The once sacred idea that sovereign bonds were risk-free has been reduced to a joke in a world where US Treasury yields spike and tank like meme stocks. And the only constant is policy whiplash. And amid it all, Bitcoin is not flinching. Why? Because it doesn't care about politics. It doesn't bend to lobbyists. It doesn't get printed when wars break out or when votes need to be bought. It's simply obeys code. Fixed, transparent, uncompromising. This is the antithesis of the fiat model. This is why it's rising, and why those who still measure it only in dollars are missing the entire point. Let's pull the curtain back. Behind every major financial crisis, 2008, 2020, and now 2025, was one common denominator: central bank overreach. Emergency liquidity injections. Moral hazard from too big to fail. A widening wealth gap enabled by asset inflation while wages stagnated. We have rewarded debt, punished savers. And as a result, we have bred fragility. Fragility in systems. Fragility in policy. Fragility in thought. But here's the truth the mainstream won't tell you. Bitcoin is not fragile. Fiat is fragile because it requires belief to survive. Bitcoin earns belief with every block, having every failed attempt to break it. So when Israel and Iran erupt into open conflict, when oil surges past $130, when S&P futures swing violently in pre-market trading, Bitcoin doesn't need to convince anyone. It just is. It keeps moving, keeps verifying, keeps securing. This is resilience without permission. But let's move from the philosophical to the strategic. What do you do now with this knowledge? You adapt. Not emotionally, not based on fear, but with economic clarity and disciplined foresight. Here's how. 1. Allocate for asymmetric upside. You are living through a decade where traditional 60/40ths portfolios are being systematically dismantled by inflation, rate volatility, and declining real growth. You need exposure to assets that are not correlated to sovereign fragility. Bitcoin is at the top of that list. But don't throw darts. Be intentional. Use volatility bands. Ladder into positions. Don't FOMO strategize. 2. Watch commodities like a general tracksuit movements. Brent crude, copper, lithium, uranium. These are not just materials. They are the early warning signals of monetary stress. In 2025, commodities are the truth tellers, the assets that can't be manipulated with zero-bound policy. Watch oil. When it spikes in a conflict zone, inflation expectations shift overnight. Watch copper when it runs. It signals manufacturing demand and green energy infrastructure. Read these signals like sacred text, because they tell you when the money printers will return and when to front-run the next liquidity wave. 3. Don't just track M2, track velocity. Most people focus on supply, but supply without movement is just potential. Velocity tells you when that dormant money becomes inflationary, and in a high-velocity environment, hard assets explode. Bitcoin, real estate, precious metals, they don't just preserve value. They outpace decay. 4. Understand behavioral timing. Study what Daniel Kahneman called narrative traps. In volatile markets, people don't seek truth, they seek comfort. They cling to stories. Bitcoin is a bubble. Governments will crush it. These are emotional armor, not analysis. But if you understand when the herd turns from fear to greed, from denial to chase, you can position before the stampede. Learn to buy despair. Learn to sell delusion. Discipline is your only edge in a market where everyone is chasing dopamine. 5. Follow where the smart money is going, not what they say. When asset managers tell you crypto is risky but file quietly for Bitcoin ETFs, that's your signal. When IMF reports warn about stablecoins destabilizing economies, that's a compliment. It means the legacy system sees the threat. Don't listen to their words, follow their allocation. Now let's address the unspoken fear, regulation. Yes, governments will fight back. Yes, central banks will try to offer their own safer digital currencies. Yes, headlines will scream, bam, threat, fraud. But ask yourself this. When has innovation ever waited for permission? The internet was regulated. It still changed the world. Open source software was resisted. It now runs every cloud system. Cryptography was once classified as a weapon. Now it secures your bank. Bitcoin isn't asking for a seat at the table. It's building a new one. One where rules are consensus-driven, not dictated by bureaucrats. One where value flows to productivity, not to proximity to power. And here's the punchline. The regulators need Bitcoin more than they realize. Because in a world of de-dollarization, capital flight, and fractured alliances, they will need a neutral reserve asset. Bitcoin is already becoming that asset, whether they admit it or not. So what does that mean for you? It means position now, not later, because adoption curves are exponential. And the next 10x move will not give you time to think about it. It will leave you watching from the sidelines while others write history. It will separate the few who were ready from the many who were comfortable. Ask yourself, are you still thinking in fiat terms? Are you still waiting for your favorite analyst to give you the green light? Are you still believing that this system can be reformed from within? Because if you are, understand this. You are choosing to play the old game as it collapses. And that collapse is not future tense anymore. It's now. It's here. It's flashing across your screen with every uptick of Bitcoin. The future is calling. The question is no longer whether Bitcoin will survive. The question is whether you will thrive in the new world it's building. So I'll ask you one more time. Are you on the right side or the wrong side of history? Because history isn't written in headlines, it's written in positioning. Let's now pierce through the fog of monetary theater and look at what's really being architected behind the curtain. Central bank digital currencies. The great illusion of safety in the next act of Fiat's drama. You will be told they're here to make payments faster, more efficient, more modern. You will be told they are digital upgrades to your existing money. You will hear words like inclusion, innovation, anti-fraud. But behind the technocratic jargon lies the real purpose. Control, total programmable control. Unlike Bitcoin, which is decentralized and voluntary, CBDCs are programmable money issued by the state. They can expire. They can be geo-fenced. They can be turned off. Your money, if it still is yours, will be filtered through the algorithms of compliance. Misspeak online? Get debanked. Buy too much meat or fuel. Get throttled. Support the wrong cause? Get flagged. This is not dystopian fiction. This is already live in pilot projects from China to Nigeria. The infrastructure is being built. And when the next financial shock hits, they won't offer you a choice. They'll offer you a rescue. A universal basic income loaded onto a CBDC wallet, redeemable only under the new rules. And in that moment, you'll understand what Bitcoin was really for. Exit. Exit from coercion. Exit from surveillance. Exit from systems that treat you not as a citizen, but as a transaction to be regulated. You will be asked to choose. And not metaphorically. Literally, between the controlled digital economy of the state and the free digital economy of the individual. And here's the irony. Most people will choose the cage. Why? Because the cage will be convenient, frictionless, subsidized. And because people fear freedom when it demands responsibility. They fear volatility more than they fear servitude. But you do not fear responsibility, you crave sovereignty. You do not want comfort at the cost of consciousness. You want clarity, control, conviction. And that's what this new monetary era demands. Not speculation, but economic self-governance. You are not just investing anymore, you are voting with your capital, voting for decentralization, voting for transparency, voting for a system that cannot be bribed, cannot be manipulated, cannot be debased. This is your moment to step off the plantation of legacy finance and walk into the open frontier of monetary truth. But let's go beyond Bitcoin again, because this movement doesn't stop at one asset. We are entering a multipolar economic world where global reserve currencies are not issued, they are earned. Where trust is no longer enforced at the barrel of a bond, but built through performance, integrity, and open access. Watch for this next trend: the fragmentation of trade and finance into digital blocks. The BRICS Plus nations launching their commodity-backed settlement rails. ASEAN and African Union nations experimenting with intra-regional stablecoins. Latin America aligning with neutral crypto-based ledgers to escape dollar hegemony. You are watching the slow death of unipolar finance. And with every step away from the petrodollar, the demand for non-sovereign stores of value increases. And so does the importance of how you think. Because here's the dangerous thing no one tells you. Most people aren't losing because of information. They're losing because of identity. They are still operating with the mind of the 20th century in a 21st century battlefield. They are traders trying to act like investors, investors trying to act like policymakers, citizens trying to act like spectators, but you must become something else. You must become a monetary strategist, a systems thinker, a participant in the architecture of the next economy. You must know where the liquidity is going before it gets there. You must understand how regulation is evolving before it crushes retail. You must learn how capital moves in times of chaos, not calm. This isn't about playing the market. It's about reading the terrain, because this terrain is war, a war of currencies, a war of ideologies, a war of narratives, and every day you hesitate, every day you cling to the comfort of the old system, is a day you bleed. Not in dollars lost, but in opportunities missed. So let me speak directly to your instinct. Now, the part of you that knows this is real, that part of you that feels the tightening noose of inflation every time you visit the store, that part of you that watches the headlines and sees the pattern, not the noise. That part of you that's tired of waiting for permission from advisors who are still trapped in 1985. Here's your permission. You are allowed to act before the herd. You are allowed to believe the evidence in front of your own eyes. You are allowed to stop playing their game and start building your own. Bitcoin at $105,000 isn't the end of the story. It's the beginning of your reckoning. And the market doesn't care about your feelings, it cares about your positioning. So, where are you positioned right now? Because here's what's coming next. As inflation resurges in waves, Bitcoin will be reclassified not as risky, but as protective. As fiat nations scramble to digitize, decentralized protocols will look less exotic, more essential. As wars flare and supply chains fracture, commodity-backed smart contracts will outperform trust-based trade agreements. And as AI rewrites the rules of labor and production, only those holding productive, digital assets will thrive. Do you understand now? This isn't just an investment strategy, it's a survival blueprint, a mental OS upgrade, a call to those few who are ready to see not just the asset class, but the civilization shift underneath it. And here's the final truth. This window will not stay open. Every monetary revolution has its pre-mass adoption moment, its early internet, its pre-Gutenberg, its pre-gold standard period. And once it's gone, it's gone. You'll either be one of the ones who saw it early, or one of the ones who says, I could have acted when Bitcoin was at $105,000. I just didn't believe it was real until it was too late. But by then, the wealth will have moved. The systems will have calcified. The gates will have closed. And the story will have already been written. Are you ready to write your chapter? Because if you're still here, truly here, then something in you is done playing small. Done waiting for mainstream consensus to tell you it's safe. Done mistaking comfort for security in a system that has quietly sold off your future, asset by asset, freedom by freedom. Now we shift from revelation to responsibility. Because clarity without action is delusion, conviction without discipline is fantasy, and awareness without execution is a slow death in disguise. Let's talk strategy. Not in theory, but in the trenches. Because if Bitcoin at $105,000 is your wake-up call, then the next decisions you make will define your decade. Start with this. Reframe your time horizon. Most people are thinking in 90-day cycles, quarter to quarter, news to news. But wealth, real, sovereign, multi-generational wealth is built across time horizons long enough to scare the average investor. Bitcoin punishes the short-term thinker. It rewards the builder, the allocator, the accumulator, The one who sees time preference not as a sacrifice, but as a superpower. You don't need to time the top. You need to own the trend. You don't need to be early on every dip. You need to be consistent, unshakeable, and immune to the noise. Let others trade headlines. You position for paradigm shifts. And let's be honest, you're not early anymore. You're not the pioneer sleeping on hard drives in 2012. But you are still in the final window before the sovereign funds, pension whales, and central banks arrive en masse. Because make no mistake, they are coming in silence, in shadows, in ETF structures and off-balance sheet allocations. And once they've built their position, they will bless the asset publicly. They'll print the white papers. They'll testify in front of Congress. They'll fund the think tanks to call it an essential part of the modern portfolio. And the price you see today, $105,000, will look laughably small. So the only question is, will you be in before that bell rings or after? Let's talk allocation. 1 to 5% is no longer risky. It's responsible. This is no longer about betting on crypto. It's about hedging against the collapse of fiat credibility. You diversify across jurisdictions, across asset types, but not across fundamental truths. And the fundamental truth is this: trust is migrating from institutions to protocols, from governments to open source code, from decree to consensus. That shift is irreversible. And the capital that flows with it will reshape every asset class on the planet. Real estate will be repriced based on tokenized title. Commodities will be traded on-chain. Sovereign wealth funds will hold BTC alongside gold. Digital identity will become as valuable as land once was. And the old guard will call it speculation right up until their portfolios become fossils. Now let's add another layer: macro discipline. This isn't just about hodling. This is about understanding the flows. When does capital rotate from tech stocks to hard assets? When do central banks pause, pivot, or panic? When does M2 spike? And what does it mean when it doesn't trickle into the real economy? In a post-liquidity trap world, you must become fluent in shadow finance. Understand repo markets because they reveal hidden stress. Track bond volatility, move index, because it tells you when the real fear sets in. Monitor stablecoin flows across blockchains because they front-run policy moves. This is no longer about opinions, it's about observation. Read what the money is doing, not what the media is saying. And while you're watching the world reposition, remember this: the true edge isn't technical, it's psychological. You win not by having the most charts, but by having the strongest conviction when the lights go out, when the markets halt, when Twitter erupts, when CNBC screams crash, when banks pause withdrawals for your safety. That's when it matters. That's when the real economy wakes up to what you already knew. That Bitcoin isn't digital gold, it's digital escape velocity. It's a lifeboat before the storm. A firewall between you and a system that lost the plot, and it's not just Bitcoin. Ethereum, decentralized storage, privacy protocols, AI native value layers, these are not just technologies. They are exit routes from an economic architecture that once looked permanent, and now bleeds from every pillar. But don't overextend. Don't chase hype. Protect your downside so you never lose your seat at the table. Set floors. Take profit on euphoria. Rotate into real yield. Build not just a portfolio but an economic fortress. And here's the real flex in 2025. Not leverage, not risk. Resilience. Resilience in your allocations. Resilience in your psychology. Resilience in your narrative. Because the next stage of this game is about mental capital, not just financial. In a world where noise becomes violence and information becomes weaponized, your edge will come from the stillness you can maintain while others panic. That is the rarest asset of all. More scarce than Bitcoin, more valuable than alpha. So take this moment, this $105,000 signal as a covenant. A commitment to never go back to the old way of seeing. To never again outsource your thinking. To never again play in a rigged casino when you have access to a sovereign network. This isn't just financial, it's philosophical, it's spiritual, it's war. The battle for economic sovereignty has already begun. And now the world is watching. The price is only the smoke. But you are the fire. Because the truth is, most won't. Most will stop right here. Numb, distracted, frozen in the headlights of a system that's burning down while telling them everything is under control. But not you. You're still listening, still leaning in. Which means you're not just trying to understand this shift. you're preparing to capitalize on it. Let's go deeper. Let's talk about the illusion of safety, that toxic comfort baked into fiat culture. The idea that cash is king while inflation erodes it silently. The belief that your salary, your pension, your 401k, your national currency is solid. Let's be honest, it's not. The average saver today is standing on sand debt-backed promises, printed without constraint, defended by confidence alone. And when that confidence cracks, as it did in Lebanon, in Argentina, in Turkey, in Venezuela, it doesn't leak out gradually. It collapses like a dam. The psychology of money turns fast. And when it does, it doesn't reward logic. It rewards velocity. The smart capital is already sprinting into hard assets, into scarcity, into sovereignty. Gold, real estate, Bitcoin, strategic commodities, but not just to hedge, to opt out, to stop participating in a system where your hard work is penalized through monetary policy you never voted for. And let me say this clearly. This isn't about politics. This is about physics. You cannot print energy. You cannot decree productivity. You cannot vote away scarcity. So now we stand at the edge of a great bifurcation. Two economies are forming in parallel. One, built on debt, compliance, digital control, and moral theater. The other, built on code, scarcity, self-custody, and verifiable trust. One, incentivizing dependence. The other, demanding sovereignty. Which side will you build your future on? Because while most people are arguing over interest rates and GDP forecasts, the deeper story is the rewiring of incentive structures. Let's take a hard pivot into energy and commodities. Because if Bitcoin is digital scarcity, then energy is its physical counterpart. And both are becoming non-negotiable in the new geopolitical chessboard. The Israel-Iran conflict isn't just a flashpoint, it's a signal that supply chains are fragile, that critical infrastructure is vulnerable, that the illusion of cheap, abundant, globalized everything is over. This is the era of resource nationalism. Watch it closely. Nations will secure oil and gas not through markets, but through alliances and leverage. Rare earth metals will become the new battleground for digital sovereignty. Food and water security will be priced into sovereign bond risk. And guess what? All of this funnels capital into real assets. Things with mass, energy, scarcity, utility. It's no coincidence that during geopolitical escalation, Bitcoin surges alongside oil. Because both represent the same principle, unshakeable value. One is digital entropy, the other is physical combustion. Both are immune to narrative spin. You either have them or you don't. So if you're thinking like an economic architect, ask yourself, how are you positioned across both layers? Do you hold the energy of tomorrow? Nuclear, solar infrastructure, uranium, lithium, oil refiners. Do you own access to computation and bandwidth? GPU infrastructure, decentralized data storage? Are you exposed to scarce digital collateral like Bitcoin, Ethereum, or tokenized treasuries outside the legacy system? Because the future won't reward those who guess. It will reward those who allocate with foresight. And don't let short-term volatility blind you to long-term velocity. Markets will whipsaw. Headlines will flip, but the migration is clear, from analog to digital. From narrative trust to math-based trust. From state promises to provable possession. Now let's elevate this even further. Let's talk AI, automation, and labor, the great elephant standing in every economic room. In the next 5 years, productivity will explode. But the jobs it replaces won't come back. What does that mean? It means you can't just work harder. You have to own the systems that work while you sleep. This is the greatest transfer of power since the Industrial Revolution. And only those who own digital infrastructure, blockchains, compute networks, yield. Protocols, tokenized assets will participate in the upside. Everything else? That's just treading water in an ocean that's rising faster than your wages. Understand this. The old playbook study, earn, save, retire is dead. You must now think in terms of economic leverage, asymmetric bets, and network effects. Bitcoin isn't just an investment. It's a wedge into the new financial stack. A gateway asset that leads to learning about self-custody, privacy, stablecoin yield, layer 2, protocols, synthetic assets, DAOs, and programmable finance. Ignore the noise. Embrace the signal. And if you think this is too complicated, remember, complexity is the tax the system imposes to keep you out. Mastery is rebellion. Simplicity on the other side of complexity is sovereignty. This is what the elites know, and they're praying you never learn it. Because when you do, you stop being a passive consumer. You become a participant in the new world economy. And that, more than any chart or token or price level, is the most powerful investment you'll ever make. Ownership of your mind, ownership of your behavior, ownership of your economic identity. The market doesn't owe you anything, but it will reward those who choose to build while others scroll, who accumulate while others panic, who strategize while others blame. So I'll ask you again, when the financial story of the 2020s is written, will your name be in the footnotes or in the foundation? Now, as you press on, feel the tectonic plates of the global economy shifting beneath your feet. You're no longer in the foothills, you're in the seismic zone. Every macro indicator, every policy whisper, every block confirmation is now part of the same grand symphony. Listen closely. The price of gold may wobble, but its story converges with Bitcoin's. Both represent refuge. When confidence in paper currencies implodes, when yield curve inversions flash recession warnings, and when sovereign bond auctions draw tepid bids, you'll see the old guard scramble back to gold and the new guard sprint toward digital gold. The two assets will dance in tandem, gold tempering Bitcoin's volatility, Bitcoin amplifying gold's legacy. You will need both in your strategic reserves, balanced not by gut, but by correlation matrices and volatility forecasts. Meanwhile, liquidity cycles continue their relentless rotations. The Fed's next pivot, whether to pause, to cut, or to retighten, will be telegraphed by real rates. But real rates are noise. The signal lies in real long-term rates adjusted for geopolitical risk. When real yields rise, capital seeks income. When they fall, capital flees to scarcity. Track the US 10-year TIPS yield alongside Bitcoin's anchor. It is the pulse of capital migration. As you refine this interplay, remember, the world isn't binary. You will allocate across a spectrum of risk, from the bedrock certainty of BTC, through the middle ground of tokenized real-world assets, to high beta bets on emerging Layer 1 protocols. That spectrum is your personal mosaic of sovereignty. Yours to compose, yours to rebalance as the winds of policy change direction. But beyond capital flows, the narrative war intensifies. Propaganda machines will rev up to discredit decentralized finance. Expect white papers demonizing anonymous transactions. Expect pundits dubbing stablecoins as stealth money printers. Expect coordinated cyberattacks on key infrastructure, denial of service assaults on major exchanges, phishing campaigns targeting new adopters. See these not as threats, but as proof of the movement's growing potency. Each failed attack, each regulatory overreach, each media tirade is a strength test for the network and for your resolve. And then there is the matter of yield. In a zero-sum game of fiat yields, protocols offering double-digit APEs on stablecoins or restaking strategies on ETH are the new battlegrounds for capital. But yield is a double-edged sword. Excess yield invites risk, counterparty jeopardy, and rug pulls. Your approach must be surgical. Allocate a calculated tranche to yield protocols you have stress-tested, audited by on-chain history and community governance. Let yield be your speed, not your tailspin. Now turn your gaze to the democratization of credit. DeFi credit markets are burgeoning lending pools where over-collateralized loans flow in seconds, without KYC. This is not the future, it is the now. You can borrow against your digital fortress to seize fleeting opportunities, liquid tokens to enact real-time arbitrage, to deploy into new staking pools, or to fund your entry into tokenized infrastructure. But do so with a strict risk budget. Never borrow more than what your stress scenarios can repay under worst-case market conditions. And as you weave these threads, store of value, liquidity flows, yield, credit, do not neglect your operational security. The greatest vulnerability in a digital world is human. Phishing, SIM swaps, Slack channel compromises. These are the front lines of the war for your assets. Harden your perimeter. Use hardware wallets, multi-sig schemes, air-gapped signing, compartmentalized key storage. Because the mightiest economic fortress can still crumble through a single click. Through all this, maintain your judgment. Metrics matter: active addresses, realized price bands, net unrealized profit loss, but so does intuition calibrated by data. When on-chain, graphs flatten yet underlying adoption inks new partnerships, elites mining Bitcoin with stranded gas, African nations trialing e-currency pilots. Those whispers in the dark are your most precious intel. You will learn to interpret the silence on-chain as much as the clamor. And let us not forget the human element. As DeFi protocols sprout, as Ethereum shards materialize, as Bitcoin's lightning nodes multiply, a global community forms. This is not a loose crowd of speculators. It is the vanguard of a new social contract. Peer-to-peer aid during crises, cross-border remittances in minutes, microfinancing the unbanked in remote villages. These use cases aren't hypothetical. They are the proof that economic sovereignty can be shared, decentralized, and ethical. So in your journey, find your role. You might become a curator of on-chain research, translating cold numbers into actionable insight. Or you might be a builder, deploying the next privacy layer or decentralized identity solution. Or perhaps you excel as a connector, forging alliances between token projects and strategic commodity producers. Whatever your path, know this: the network rewards value creation, not transactions. The most successful participants will be those who channel capital into building resilient infrastructure, regulatory safe bridges, audited smart contracts, user-friendly wallets that resist censorship. They will be the ones who amplify sovereignty by opening doors for millions, not just optimizing returns for themselves. And finally, recognize that every era has its gatekeepers. Today's gatekeepers, banks, rating agencies, clearinghouses, once claimed absolute authority. But as you immerse yourself in blockchain's logic, you see their claims as relics of a bygone era. And as you seize this moment, you become the new gatekeeper not by claiming authority, but by demonstrating competence in risk management, in community stewardship, in technical literacy. This is the highest form of power, earned authority. The storms may rage, the headlines may sensationalize, the regulators may posture, but the network marches on, block by block, consensus by consensus. And within it you have carved your niche, your strategy, your network, your legacy. So keep navigating, keep positioning, keep building. The world you save may very well be your own. And when history looks back, it will not remember those who watched from the sidelines. It will remember the architects, the ones who, amid chaos and conflict, had the courage to see clearly, to allocate decisively, and to build relentlessly. Your odyssey continues. The next frontier lies just beyond the horizon, and only those who sail forward, undaunted by the unknown, will chart its course. And now we approach the edge of the map, the place where the known world ends and the uncharted begins. Because make no mistake, we are entering a post-Fiat, post-industrial, post-truth economy, and that changes everything. It alters what nations value, how individuals transact, and what it even means to be sovereign. This is the dawn of value without borders, currency without kings, trust without intermediaries. And the next battle, the one few are prepared for, isn't about Bitcoin versus the dollar, or Ethereum versus the SEC. It's about who gets to define reality when information, money, and identity all move at the speed of light. The rise of synthetic economies. Already, we are watching the scaffolding of the next economy rise in silence. Tokenized attention, tokenized compute, tokenized labor. DAOs paying contributors directly from treasuries that live on-chain. Digital economies forming inside games, inside social networks, inside AI models, where work, reward, and governance operate outside traditional states. This is not science fiction. This is the logical next step of an economy that has digitized value but has yet to digitize control. And here's the truth they won't tell you on CNBC. The next great economic powers won't be countries. They'll be networks. Networks that create their own currencies, that govern themselves with code, that attract talent not with passports, but with shared values and open incentives. Bitcoin is not just a hedge against inflation. It is the blueprint for this new model of sovereign, trustless, programmable value. And Ethereum? It is the operating system for these emerging cloud nations. Cloud nations and the death of geography. As real-world borders collapse under pressure from war, from migration, from financial instability, digital borders are rising in their place. A 17-year-old in Lagos, Nigeria, and a software engineer in Buenos Aires Argentina can now earn, save, and invest in the same digital economy as a venture capitalist in Silicon Valley. They can all hold their wealth in Bitcoin. They can all vote in DAOs. They can all lend capital, provide liquidity, and contribute to protocols without ever stepping foot in a bank or applying for a visa. This is the revolution that scares policymakers. This is why you're seeing emergency meetings, rushed legislation, and sudden crackdowns. Because the levers of control, printing money, issuing debt, censoring transactions, don't work in this world. And those in power are beginning to realize they've lost the monopoly on economic reality. The illusion of stability. Governments will try to offer you stability. They will say, don't trust the volatility of Bitcoin. Stay in the system. But what they won't tell you is that their own currencies have already defaulted in slow motion. When they inflate your savings into nothing, when they cap your withdrawals, when they change the rules overnight, they are defaulting on the contract of trust. And every time they do, another person wakes up and says, maybe it's time I learn how to hold my own keys. That's not just a financial decision. That's a political awakening. Because once you opt out of the currency, you start opting out of the propaganda. You begin to question every institution, the news, the banks, the universities, the courts. You begin to ask, who actually benefits from this arrangement? And more often than not, the answer is not you. Financial weapons and information wars. The battlefield has changed. No more tanks, no more missiles. Today's weapons are spreadsheets, smart contracts, and social media feeds. A depeg can crash an entire nation's reserves. A rumor, amplified by algorithm, can trigger a run on the banks. A DAO, coordinating across time zones, can fund resistance movements faster than any bureaucracy. And here's the most powerful weapon of all, truth that lives on chain, immutable, uncensorable, transparent. This is why Bitcoin is dangerous. Because it doesn't just change how we store value, it changes how we record history. No more falsified ledgers. No more hidden bailouts. No more lost trillions. Everything. Time-stamped. Everything. Verified. Everything. Permanent. In a world drowning in disinformation, blockchains are the last honest witnesses. The playbook moving forward. So what do you do now? You study like your wealth depends on it, because it does. You stop listening to people who laughed at Bitcoin at $1,000 and started panicking at $100,000. You track capital flows, not headlines. You measure network growth, not media sentiment. You study M2 on-chain data, tether minting, stablecoin dominance, L2 activity. You look for cracks in the dam before it bursts. And when you see capital fleeing from centralized exchanges, when you see protocols shifting to self-custody models, when you see developers building in silence while influencers chase views, that's your signal. Because real builders don't brag. They build during the quiet. And the smart money always moves before the crowd. The final shift. From consumer to creator. The most important transition you will make is not from fiat to Bitcoin or from stocks to crypto. It's from consumer to creator, because the old world trained you to consume media, consume debt, consume products you don't need to impress people you don't like. But this new world, it rewards builders. Those who create protocols, not just participate in them. Those who write code, not just white papers. Those who build communities, not just follow trends. If you can design value, if you can build trust without permission, you will never be poor again. Not financially, not intellectually, not spiritually. Because that's what this movement is at its core. A spiritual rebellion against passivity. The storm is here, but so is the blueprint. Israel and Iran are just the surface. Beneath that surface is a deeper conflict. The collapse of the 20th century order and the birth of a new one. And you are alive in the most important decade in economic history. You can either watch it happen, or become part of the story that reshapes everything. So ask yourself, with brutal honesty, am I on the right side of history? Or am I clinging to a system that has already lost its soul? Bitcoin is not coming. It's already here. $105K is not the peak. It's the warning shot. The world is splitting between those who adapt and those who vanish. And when you look back, years from now, on this very moment, you will remember that this was the line in the sand, and you chose to step forward, not just to protect your wealth, but to build a future no one could take from you. This is your call to clarity, your call to courage, your call to creation. Don't just survive the chaos, shape what comes after it?